always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, and thank you for joining me this Tuesday, January the 17th for the market forecast. My name is John Hoagland. Again, thanks for trusting me with your time. We'll be looking for accurate context, always thinking about risk management and patience in our trading this morning. If you're already in the markets, of course, we're hoping things are going your way. We've got some information as far as economic numbers due out today. As a reminder, there is no settlement from yesterday. We are still basing basically margins off of the settlement on Fridays because yesterday it was a holiday. The CME views yesterday's activity as today's trade date. So there's no new settlements, no new volume or open interest information for us today. Everything we're going to be looking at, settlements and open interest, and as we go through the charts, is based off of Friday's estimated numbers. So a little bit vague for us as far as that is concerned. Economic numbers this morning, 7:30, the Empire State Manufacturing Index came out. This is an indication of factory activity for the month of December. And it came out much lower than expected. They were expecting contraction. I think it was 8.7%. It came out minus 32.9%. Are the markets going to view that as a positive, as retraction in the economy and perhaps a slowing of rate hikes? Quite possibly. We do have a talking Fed today at 2 o'clock, I believe, Central. John Williams is speaking. Those are the only ones that I've seen on the schedule today. The Canadian CPI shows some easing prices this morning. Just something to think about. Today is Tuesday. We do have Make Hoag Money. Here is the link to get into the Zoom meeting if you would like to be able to vote for the trades that we're going to take. There is the link. Tomorrow, after the close, and after a brief reflection, we are going to have a special group coaching session tomorrow at 3:15 with author Jared Tendler. Jared Tendler's got a very popular book out. We all enjoyed having him here last month. We're going to be doing this every month with Jared. He's going to bring a subject. He's going to talk about it, and you are going to have the opportunity to ask him questions. So that's going to be another really good session for us. Again, that's tomorrow right after the reflection at about 3:15. That's going to open up. Got about an hour with Jared, and we're going to look forward to taking advantage of that hour and getting as many questions answered as we can. Thanks for joining me yesterday for the group coaching session. Those of you that stuck around after the trading day was over, hopefully you had a good session. I mentioned that I didn't have any emailed in questions, and I got a whole bunch of them after that, so that was really good. All right. What are we looking at this morning? Well, according to Friday's settlement price, we have stocks opening mixed right now. The S&P and the NASDAQ are opening a little bit higher, perhaps if they were to open right now. The Dow a little bit lower. Yesterday, again, a non-settlement day. So if we were looking at yesterday's range, it looks like the market is opening lower. But there was such low volume yesterday, such low participation, did it even matter? Is really the question. Some interesting things on the charts today, though. German and European CPIs came out just as expected. Again, as Canada's year-over-year GDP, as China's year-over-year GDP upticks to 2.9 when it was expected at 1.8, whatever that means. Earnings season resumes with the banking sector. We had Morgan Stanley and Goldman Sachs in opposite directions. Morgan Stanley beat expectations on revenues and earnings per share, while Goldman missed on both. They are the headliners for our early releases today. After the close today, we have Interactive Brokers and United Airlines Holdings. Crude prices firmed last night as, again, China demand is seen as increasing. We've got price right at weekly kickoff high right now. It's going to be an interesting open when we get to the charts. It'll be good to see that. VIX this morning down a little bit, 9%. Is that right? Is that what I'm seeing on this? The VIX? Yeah, down about, actually up. This is a little confusing. It's right under 20 as I see it right now. So VIX continuing to really just kind of drag along the bottom. The dollar around 102.2 last I checked, relatively steady, and a little bit of an uptick in the yield in the 10-year at 3.55%. As always, make sure you hit the lucky like button. Share, comment, question, feedback. Heckling and love are always welcome here on the Market Forecast Recap and everything we do. Subscribe to our YouTube channel so you can get notifications for when we do go live. Good morning, everyone. Shaw Cunningham is the first in the room and wins the prize this morning. Good morning, Shaw Caprice. The Rooster, Jules, Dan, Zach, Brody, Gnostic, Terry, Caesar, Joel, good to see everybody, and Alejandro, George. Lacey is sleeping here right next to me. Don, good morning. Lacey, everybody's saying good morning. Lacey says good morning too. She just looked up at me like, huh? Don, good morning, Bill. Good morning, my brother Rick. It's good to see you. Looking forward to chatting on Make Hogue Money, if you can make it. Randolph to my Mortimer. Dr. VJ, good morning. Jay, Rusty Golfer, my spirit animal. Good to see you. Octoraps. There's a new name. I haven't seen that before. It's good to see you. Welcome. Jason Lewis, Anissa, Anthony Bell, good morning. Keith Abla, it's good to see you up and early this morning, Mr. Abla. Sarah Hall, prayers and love to you too. Dowitzer, Anissa, you're welcome for the link. Saltbones, good to see you. Whitecap, Fred Decker, it's good to see you, Fred. Haggle Matters, Matt, good morning. Serenity Trader, Scott Saw, Vince, Fred Decker. It was a good coaching session yesterday. Excellent. Good. I'm glad you got at least something out of it. That's, of course, always going to be the goal. Andy, good to see you. JM, Sophie, VW, SR, and Vince. Taco Tuesday, let's make some cheddar. Absolutely. Subdocs, I see a couple of new chat names there. If this is your first trip to the Market Forecast, welcome. We're going to see if we can't find some interesting levels for possible executions here. We're not trying to predict or forecast anything. We're trying to get the markets in context, be prepped for the trading day so we can trade what we see. We're always thinking about risk management, and in risk management, thinking about asymmetric opportunities where we can risk a little to make a lot. So important. First week in the combine. Good, nice to have you with us, Subdocs. We are looking forward to your success as always. Nice job, Rooster, clawing back losses, and the funded account went from 1,900 down to 1,100 down. Just take your time. Start from zero. Every trade starts from zero, Rooster. You got this. You know you can do it. We're looking forward to it. Let us know how things go. All right, on that note, we're going to jump into the charts relatively quickly. We've got a busy morning with Make Hogue Money right after the forecast. I keep saying that. It is now the market prep. The market prep. Let's take a look at the charts, starting with the daily in the E-mini S&Ps. Now, as a reminder, as we all know, yesterday was a holiday, so the volume was extremely low yesterday. It looks like we've already beaten the volume in the S&Ps, and the regular trading hours aren't even open yet. So, what do we have? Well, we're inside extended trading hour range from yesterday. All right, well, that's not a very big start there, is it? short time frame rejection above last week's high in the overnight yesterday. Maybe we're getting a little too expensive. You can see that the short time frame structures to the upside seems to be struggling a little bit here, doesn't it? We don't have a new settlement. 40.1825 is Friday's settlement. That's where margins are still being based on. We added 2,500 estimated open interest on Friday. No numbers from yesterday. So we're kind of in the weeds as far as that's concerned. If anything did change yesterday, which little likelihood of that happening, right? So the upside structure and short time frame is intact, but possibly struggling. We're going to need new business to bring continuation to the upside towards weekly kickoff high, which is currently 40.76. Take a look at the 30-minute chart here. We're going to be basing, I think, a lot of our early opportunities as to where we are in the short time frame here, showing it that the upside is struggling a little bit. We still have value moving higher, but is it doing a very good job? We can't use yesterday as a gauge for that. We're going to be basing, I think, where we opened today based off of Friday's range. And Friday, we know we had a late spike. We opened below the late spike and rejected it yesterday. Today, with all of the participants, we are opening below the base of the late spike, which would indicate rejection of higher pricing. Now, we don't have any more economic information coming out. We do have some important stuff coming out tomorrow. PPI final and retail sales tomorrow, as well as industrial production and a couple of talking Feds. Tomorrow we also have the Beige Book at 1 p.m. Central, which indicates that we have 2 weeks now until the next FOMC meeting. That FOMC meeting, I believe, is on February the 1st. It's always Wednesday when the release is out, and it's 2 weeks. So, what are we looking at? Well, we know that our settlement price is based off of Friday, so here it is. It's all the way up here. It looks like we're going to be opening with a gap below yesterday's range, but I'm not really putting much weight inside yesterday's range. What I'm putting the weight on is the fact that we aren't going to be opening in or above the late spike, which occurred on Friday. To me, this is really a really long Monday. Yesterday's session and today's session. So opening below that, it indicates again that the upside auction is beginning to struggle. It's showing rejection of higher pricing. It looks like we're going to be opening with a gap from yesterday. Again, I'm not putting that much into it, but there's a whole lot of repair that could kind of continue to happen through the range from Friday. Now we know we had some pretty decent negative delta on Wednesday and Thursday, and even on Friday on this push to the upside, which created the late spike in short time frame participants getting out before the weekend. We're seeing a slowing of open interest. Again, we don't have the Friday final yet. We're not going to see a big change in open interest yesterday. So with momentum showing signs of slowing, with open interest showing signs of slowing, I'm starting to think that there may be a change, and that change is likely to occur back to the upside against the last week's high. If we start to see lower highs and lower lows in short time frame, I'm going to start to think about looking for opportunities to sell strength until proven wrong. So we're going to open with a gap from yesterday. And again, I'm not putting that much into it. There's a whole bunch of potential repair that could come from Friday's activity. Here's the TPO chart. So what I'm talking about is, we have a double distribution trend day with a late spike at the end of the day. We're opening below the late spike between this assumed point of control from this area of distribution of time and volume, and then we've got this point of control from this distribution of time and volume. If we open between them, the first thing that the market, I think, there's a probability of is it's going to check to this point of control, and it's going to check to this point of control and clean up some of the unfinished business that may be left between those two levels. So try and stay patient. I'm going to keep my focus on those two naked points of control from Friday as kind of an initial area for an initial balance. Because we're inside the range from Friday, I'm going to try and stay patient and look for better trade locations as the day goes on. On Friday, we did have the initial balance, the low of the session. We're seeing more excess on the lows here than we are on the highs, especially with the late spike here, but that may be viewed as excess because we've opened below it. Very small holiday range here yesterday, and that doesn't even really matter. There's a low excess high on here that is a little bit concerning, especially with the excess at these lows, but there's lots of space. One thing that I want everybody to keep an eye on is the anomaly in the profile from Friday. This little TPO, single TPO, just sticking out there is unchecked. It is an original anomaly. They tend to be visual targets. If this market starts to rotate lower and takes out this naked point of control, the visual target would be to this little anomaly down here. Where is that little anomaly? 39.85 even, approximately. So I'll be keeping an eye on that. Even if I don't participate, I want to see if price does notice that. If traders eyeball it and they're looking at it, they have a tendency to make price go there. Here is the crude oil opening basically right at weekly kickoff high. We are still trading the February contract today. As I looked at it this morning, the February still had a little bit more volume. So I'm going to switch to March tomorrow. I'll switch all the little levels and everything for the forecast, for the prep tomorrow. I keep saying forecast, it's prep. I'll check change all the levels, and we'll be looking at the March contract, which I'm very pleased with because March kind of marks the end of winter here for me, and we'll be about a month and a half away. So, weekly kickoff high in play, even on the open here. The weekly kickoff high is 80.70. I made a mistake. I thought it was 80.50. It's 80.70. What's our current high? 80.60 something. So we are opening with a test of this. Now, what are weekly kickoff levels? Weekly kickoff levels are levels that we believe longer time frame traders will need to, want to, or be forced to adjust inventory levels. That should bring longer time frame traders into the marketplace. There's nothing finite, nothing has to happen, and nothing happens exactly the same every time, and there's no guarantee that it is going to force longer time frame traders into the market. But when we look at this is an important inflection level. Acceptance above it gives us leverage, or gives us the opportunity to see this market come all the way back up to this 90 level, where I've been seeing lots of traders kind of focusing on that as a potential upside target and a potential running out of upside momentum. We've got to get through this weekly kickoff level first. So here's crude with a gap above yesterday and a gap above Friday. We know we had a late spike. We're opening a full market with all the participants above the late spike from Friday. To me, this is friendly for continuation to the upside. Weekly kickoff 80.70 is going to be a hiccup for that. If we do find acceptance above it, we have to go with it. If we fail below it, we have to go the other direction. If it happens to be one of those levels that becomes magnetic, be careful with that. It can chew you up. It can get you chopped up. The reason I do like these levels is because it allows me the opportunity to limit risk. Limit risk. If we show signs of acceptance above, if you're short, you'd better get out. Now, here it is. It would kind of make sense here that the opening range is the low of the session. No, we did take one look below it. Now we're back above it. So the opening range, not exactly the low of the session, but we did take out the stops below it and turn around. So this 80.70 is currently our high. We may go back and revisit that as we get closer to the end of the market prep here. The NASDAQ is a very similar market, but different. But today it reads almost exactly the same. We've got an inside extended trading hour range. The last week's high is pivotal. It was rejected in an overnight session yesterday. That's this pink line here. Upside structure is intact, but it's again struggling. We need new business. Take a look at the 30-minute here. If we're going to continue this market, we need new buyers to come in and push this market higher. Value continues to push higher. Again, yesterday, I'm not really looking at yesterday as a full day. I'm looking at yesterday and today as one. The market opened below the late spike in the NASDAQ, showed rejection of it. We're opening below the base of the late spike again today, again showing rejection, and there is the potential for a lot of repair down here. We're going to open with a gap below yesterday's range. Again, not all that important if you ask me. Here's yesterday's range. Here's Friday's range. Here's the late spike, rejection. Opening below it today, also showing rejection. Possible repair. No anomaly down here. But again, this NASDAQ chart, TPO chart, and I guess it is in single TPOs. So no anomaly down there. But again, the possibility of opening and falling into repair. Gold. So are we starting to form a little bit of a bull flag here? We've got consolidation. We've got continuation. We've got, pretty decent volume on Friday with another increase of 12,000 estimated in open interest. That means money's still coming into this. Again, rejection above last week's high. Got to keep your eyes on the U.S. dollar, and we are on the front edge of rollover for gold. Gold, I see, is scheduled to roll over on the 31st of January. 31st of January, and we will roll to the April contract. Will go right past the March contract to the April contract. So keeping in mind that we are coming into rollover for gold. It's been a long session here with the December contract, which is always nice without the rollovers. But back to what we're thinking about here. Are we starting to form a bull flag? Here's the 30-minute chart. So we've got a smaller range. It's only one day. But again, we've got a small range in the overnight last night. We're testing this trend line right now. If we accept above it, I can see us continuing this move to the upside. A bear flag is a narrow, low volume range in the opposite direction from the bigger picture. And that's exactly what we have here. So we accept above here. I can see this market continuing to push higher. Again, you've got to keep your eye on the dollar. Take a look at the TPO chart. We had a gap, we had a late spike on Friday. We've opened and rejected that late spike in 2 sessions now. But if this bull flag breaks and we find buyers, we could easily remedy that. The late spike rejection is acceptance of lower pricing. It's all about probabilities. Nothing has to happen and anything can. SR TPOs are these charts. These are market profile charts, and the basic building block is the TPO, the time price opportunity. Each of these is a time price opportunity. Now, SR, next week, on Wednesday and Thursday, I'm going to be going over market profile, the auction process, and a way that I organize that information without making it too complicated. When we overcomplicate things, it becomes more difficult. So SR, pay attention to your emails. As we get closer to it, I'll be putting out the link to register for this 2-day webinar that's going to be from 12:30 Central to 1:30 Central next Wednesday and next Thursday. And we're going to go over what the market profile is, what a TPO is, what a point of control is. We're going to go over all the basics of the profile. We're going to go over some of the day types of the profile and what their implications can be. And we're going to go over the basics of the auction process, the features of the auction process. What is an auction? What are we looking at as far as organizing information outside of the charts that can help us understand the health or the lack of health of an auction process? So we will be getting to that again next week, Wednesday and Thursday, with a 2-day webinar series. All right, SR, so stick around, keep coming, check your email, and make sure you get registered for that. Okay? All right. So I think we're pretty much done with gold here. Yesterday, the initial balance was the high and the low. So it was wait a minute, was the low, not the high. The initial balance low was the low of the regular trading hour session. We're just putting in the initial balance now in gold. And the euro, finding some balance here. You're welcome, SR. Finding some balance here in short time frame. Range bound idle as the U.S. hangs around. It seems to be coiling. We're putting in a lower high, a higher low, and a lower high here. It seems we need new business for this market to continue in any direction. Here's the 30-minute chart. Last week's high rejected yesterday. That happened on a lot of these markets. Yesterday, really range bound inside value. Today, opening with a gap above yesterday's range and a gap above Friday's range. Attempting to accept higher pricing. Overnight inventory, I think by the open was a little bit long, but I don't think that's going to help us that much. We're still really kind of range bound and coiling in this area. I'm looking at these highs and these lows for more longer or better or bigger opportunities. Not really going to be doing much in the middle here. Here's the TPO chart. So excess high, excess low. Down here is the area I'm looking at, and at these highs is an area I'm looking at. Anything in the middle, not so much. 10-year. Centrally located between last week's high and low. This market is in short time frame control. Of course it was yesterday because there were no longer time frame participants in this market yesterday. Look at the volume yesterday. It was absolutely horrendous. So we're range bound in short time frame, price central, short time frame control. Take a look at the 30. Opening with a gap, closing the gap right away. We must have had a downtick in the yield here. Little bit of a downtick, not much. Just kind of taking us back above excess here, back into range, back into value. Stay patient. Take a look at the TPO chart here. A bit of a mess. Lower extreme here, upper extreme here. Right in the middle, be patient. Let the initial balance establish itself, then focus on the initial balance for possible opportunities. Friday's initial balance low is the low of the session. The high of the session, high of the initial balance yesterday. Week low at the high yesterday, week high, excess at the low yesterday, but yesterday didn't really count. I'm sorry, yesterday. Take a quick look here. Okay, the downside auction still looks healthy, still is intact, seems to be struggling in the natural gas. Again, on Friday, we added 9,200 on a down day. Yesterday, very low volume. Today, we're still pulling back. Downside to digestive market state is what I'm calling this because there's been no break of downside structure. Here's the 30. we starting to put up another kind of a bear flag here? The market was long. It is now kind of reconciled those overnight longs, was unable to close the gap. So that tells me I'm still looking for opportunities to buy weakness here should I get it. Acceptance in value from yesterday or even range from yesterday could pull price back down. Maybe a check of the naked point of control from Friday. TPO chart. TPO extreme IB high yesterday is the high of the session. Unable to close the gap again. A very prominent naked point of control above. And we see excess at the lows. It's going to be an interesting trading day. They always are. You know, that's the one thing that keeps us coming back is every trading day is a new day. Every trading day there's something new to learn, something new to look at, right? So let's take our deep breath. Be ready for the trading day today. Looking forward to seeing you all at Make Hogue Money. Hopefully we'll have a good session. We've had about 2-3 weeks where we've made some money, so we'll look for that to continue. Again, looking forward to seeing you there. It will also be available to watch on YouTube. You will be able to comment. I'm trying to keep an eye on comments on both YouTube and the Zoom. But you won't be able to vote on YouTube, but you'll still be able to hang out and see what's going on with us. So I'm going to get prepared for Make Hogue Money. Get out there and profit today. Trade well. Be kind to yourself. Be kind to others. Say a prayer for world peace. And I'll see you in just a couple of minutes. If not, trade well today.